Welcome to another episode of the John McEntyre Show Live. I'm John McEntyre. This show is committed to your financial health and wellness. Today is Thursday, November the 21st, 2024. And we are definitely, like I say every day, we are definitely moving along in this month here, getting closer to the big days, those serious days where we're basically me. I want to put it like this: one week away from the big eating day. So that's why I'm excited. I don't know why. I don't know what excites you about the holidays, but as people know me, it is the food. One of the big things that excites me. So I'm knocking off the weight that I'm gonna gain during the holiday season because that's my strategy. I usually try to keep it to where I gain no more than 10 pounds over the holidays. So I knock off 10 extra pounds before the holidays start. End of the year, I break even. It's just like taxes. You don't want to give too much. You don't want to take away too much. You want to pretty much break even there. But like taxes, if I have to pay, if I've gained less weight than I intended to, that's even better. Well, I can eat the same amount of food, but gain less weight. That's good. Like taxes, get to keep more of the income. That's good. But as you can see, I can pretty much twist anything. But today we have a good show. It's actually something that people are overlooking. A vast majority of uh, people, they financially they're overlooking, and it's the spousal IRA. Um, Most people think that, and we see it. It's seen all the time when a a couple, especially married couple, one spouse works, is the full time breadwinner. The other spouse may may work part time or not even work at all. Um, Usually, they think that they don't have too many benefits, and I've covered a lot of the benefits. Excuse me, that they can have. For instance, they don't have like their own life insurance policy. They don't have their own disability insurance, health insurance, things like that. Most people, they think of health. They don't think of the life insurance or the disability insurance of, replacing the lost time of raising the kids, taking care of the home, things like that. Someone will need to be in place to take care of that, because the working spouse or the living spouse has to focus on doing what they've always done. Well, in the world of in the area of retirement, a big a large amount of people, they are missing one of the greatest benefits in retirement in retirement accounts, and it's very overlooked. Even in the advisory world, most advisors, they don't think about it until it's mentioned. Most of the time, I've talked to people and they say that they've had to mention it to their advisor, and then their advisor had to get some assistance on it. And like I said, it's called the spousal IRA. Um, and I always tell people that the non-working spouse, just because you don't earn income or don't earn a lot, that doesn't mean you have to take a back seat to your partner when it comes to this. Um, it's a major benefit. You get more benefit because this particular spouse, they're not having to work, or maybe working very minimal hours. They're spending time in the home, like I said, but they're being able to have a retirement account of their own. And so that benefits everyone, because when it comes to the retirement saving strategy, people, they overlook this valuable opportunity. And what it is basically an exception to the usual rule that someone must have earned income to contribute to an IRA account, to an IRA. Um, this unique feature by itself, I mean, really think about it, it can double a couple's retirement savings capacity. So Did you hear that? It can double. It has the potential to double your retirement um, with one income. Now that's a big time win across the board. Think about that. That's a wallet win and a half to have in it. So the question is, what is a spousal IRA? Well, the first thing to know is that a spousal IRA, it isn't a separate type of an account. It's a provision. It's not a separate IRA like a Roth IRA, traditional IRA, SEP IRA. It's actually a provision in tax code that would allow. Um, well, the IRA itself is just an IRA. It's an IRA account. You can set it up as a Roth or a traditional, and it's a provision. What it is, it's not a particular type of an account. It's a provision, and it allows the working spouse to contribute to an IRA on behalf of a non-working or lower earning spouse. So you see the win in that. So as I was saying earlier, that could actually double your yearly contributions to your retirement accounts. Another one to maximize. Um, and this time of the year, the reason why I'm talking about it, because this time of the year, people, they begin to really start to look at their finances. I know we do, um, making sure we didn't miss anything, miss any contributions, um, any into retirement. Make sure our insurances are correct. You have to look at the tax situations, things like that. And so this is perfect to take a look at. And to qualify for the spousal IRA, you must be legally married and file taxes jointly. And usually that's what's going on when you have a spouse that you know one works and the other one is in the home works in the home, or has very low income. Usually there's a joint filing with the taxes. The working spouse, they must earn enough income to cover the contributions for both IRAs. We'll get into the contributions a little bit later. And like regular IRAs, spousal IRAs can be, like I said earlier, traditional or Roth. Um, Now we can get into the limits here. The spousal IRA rules and contribution limits are as follows. The working spouse can contribute to an IRA in the name of the non-working spouse up to the annual limits, with that's set by the IRS. Earlier I said, these things with IRS, that wasn't true. Now we're actually getting to where the IRS sets the rules. For instance, in 2024, the IRA contribution limit is $7,000 per person. And if you're 50 or older, there's an extra $1,000 catch-up contribution, and that's for 50 or older. And the total contribution cannot exceed the taxable income reported on your joint federal tax return. Basically, it's very basic. It's not. That's very limited for the benefits that you receive for it. It is important to note that the spousal IRA is owned by the person whose name is on the account. That means that non-working or not or lower income earning spouse, it's their account. It's not controlled by us, by the income earning spouse or anything like that. This is uh, this is an IRA account for the spouse. They cannot have joint accounts like this, and it doesn't. And it's regardless of who funds the account. So just remember that spouse, non-work spouse, they get their account. It's contributed to. It's theirs. They have to make the right decisions for it. It's just that someone else is making the contributions. The working spouse is making the contributions. And so just think, if you're 50 years old and you're not working, spouse is working, you open up an IRA, a spousal IRA for you, and a spousal IRA. That means an extra $8,000 a year can be, in contributions. And if it's a Roth, it's tax money. So that means when it's time to take the distributions, it's tax-free distributions. And so for some people, that means they're planning to be in a higher tax bracket once they're older. So they're taking care of taxes now, and let's just say that's an extra $8,000 per year. Let's just say it's 15 years. So you can see that that's over $100,000 in extra retirement funds, and every dollar counts. An extra $100,000 from what I've seen with people, that's better healthcare insurance. That could be long-term care insurance premiums being paid. Anything that would be beneficial that would help, in the retirement years. It can be rolled over. It's all types of things. Now that you've heard about it, you can talk about it to your advisor. You can give us a call here. We could talk about it. And you just look at the benefits of the benefits received, from an extra, just say 15 years. It might not even be 15, it could be 10. Okay, so that's an extra $80,000. Um, done right, there you go. You have a big time benefit. Now, there are some key tax benefits to it. The tax advantage savings. The primary benefit of the spousal IRA, and that it allows the eligible couple to boost their tax advantage retirement savings, like I was just talking about. Even with one income, you can contribute to two IRAs, and that's potential. You can potentially reduce your overall tax burden that way. um, tax deductions for traditional IRAs. You may be able to reduce your taxable income by deducting the spousal IRA contribution. And that eligibility depends on factors. It's like I was talking about early, the IRA type, income level. Remember, it follows the rules of IRAs. So you have the income level thing. So if you're over a certain income, this may not apply to you. Well, over I think right around 230,000 annual income may not uh, apply to you. Um, and the coverage under a workplace retirement plan, you know. So you have to think about those types of things. Uh, with a Roth IRA, contributions are made with after-tax dollars, like I said earlier, which means your qualified distributions are tax-free. I just want to make sure and stress that one again. There are some potential drawbacks, maybe, and while the tax benefits of a spousal IRA can be significant, there are some potential challenges to consider, and I mentioned those earlier. 2024, $230,000 is the cutoff for a married couple in 2024. Um, so you go over that, then the contributions does not apply. You do have the required minimum distribution. The traditional spousal IRAs are subject to the um, RMDs starting at age 73. That's it, as of 2023. It's going to go up every few years. They're going to increase it. They've already made the decision to increase that. And it does have its early withdrawal penalties unless an exception applies. And I've talked about those in other shows. And you just look up the type of IRA that you're planning to use. Just look at the exceptions, because the withdrawals from a spousal IRA before 59 and a half may be subject to a 10% early withdrawal penalty, pretty much like the other IRAs. So most people, like I say, they've overlooked this. Most just don't know about it. They're just thinking because this person does not earn income, or earn very low income, they just don't qualify for retirement accounts or something like that. Anything, and the working spouse, they just don't know. They're just thinking, okay, I have to make these contributions to take care of both of us, which, as you can see, that's not the case. You can do a spousal IRA, and it can enhance the retirement savings, reduce the tax burden potentially, and this is a good thing. And like all financial decisions, it's important to consider both the benefits and potential drawbacks in the context of, your overall financial situation. So it is important that you talk to a financial advisor and or a tax professional, because you want to make sure that you want to get all of the benefits on both sides, taxes and other areas, but you don't want to hurt yourself with it. You want to make sure that you're doing it right, because done right, you can almost double your retirement contributions on with one income, with the tax benefits and everything. Done incorrectly, it might not work out so well. So this is just something I wanted to put out there, make sure that for the people that aren't aware, or the people that might have been aware and forgotten about it, this is actually a very good way to beef up that retirement account. You may need to catch up, things like that. This is another way that you could catch up if you're married. So that's just what I want to maybe uh, put another toolbox, something else in the toolbox for your retirement. So with that being said, I hope that the information that I gave was beneficial. If it was, if you're watching by YouTube, subscribe to the channel, like the like the show. If you're watching by Facebook, give it a thumbs up, give it a like. Uh, don't forget, share those wallet wins. This is a big wallet win here, so I wanted to focus on it. Share those wallet wins. Send in your questions, your comments. Contact us if you need any assistance. Maybe time to look at your financial picture. Contact our office here. We'll schedule an appointment virtually or in person. It's your choice. Um, I'll be back tomorrow. Tomorrow is Friday, so we'll be talking about Medicare. And until tomorrow, we'll talk.